In today's video, we're going to be backtesting the two candle trade strategy developed by a YouTuber influencer called Tony Rockall. Now, this particular strategy, according to him, he's made it very simple and straightforward. It's solely based on price action, and it particularly focuses on behavior of two consecutive candlesticks, mainly on the 1 hour chart. Now, I've gone through his course, which is free on his YouTube page. It's about 5 parts to it, and what I found was that even though he's made it out to be quite simple, when he goes into in depth and he's trying to teach some of his students, I found it myself getting a bit overwhelmed by a lot of what he was sharing, and I'm sure a lot of you that are watching this probably felt the same way. So what I wanted to do on today's video is backtest that strategy, but I've taken the nuggets from his video. So if Rock, if you're watching this, I really appreciate you sharing this particular strategy, because from what you've shared in the video, I've managed to integrate it into a mechanical way of trading. I know that you've mentioned in one of your videos that it's very hard to replicate a strategy because market behavior changes. However, if I was to able to mechanically trade this on a backtest, I wanted to see really what the results would produce. So you guys that are in the community on this channel, the two candle strategy focuses on the 1 hour, which I've got over here, as you can see, and he emphasizes that it's a two candle strategy. So if it's bullish, you are anticipating the next candle to be bullish. If it's bearish, you are anticipating the next candle to be bearish. He also goes on to looking at market structure shift and a few other things there that, instead of simplifying the strategy, in my humble opinion, it makes it quite complicated. So what I've done is I've decided to add a couple of EMAs. Just instead of me looking at these higher highs, higher lows, I wanted to add these EMAs on there, which straight away just shows me market direction. And these EMAs are the 10, as you can see, which is the green, and the 50, which is the orange. And very simply, all I'm looking for is, if the green is above the orange, I'm only looking for bullish candles. If the green is below the orange, like for example here, I was only looking for bearish candle. That's it. So step one is, where are we in the market? So if we're above, we are bullish. If we're below, we are bearish. So that kind of takes away this whole market structure analysis that can overwhelm a new person. Next, so you can see straight away we have got a bearish candle here, but because the market is bullish, we are looking for a bullish candlestick. Okay, once we have identified a bullish candlestick, which we haven't got that yet, then we wait for the next one, which this one you may consider it to be bullish. However, it's got a bit of a wick, and I found from the backtesting that when you have a wick like this, which is almost 50% of the body itself, the probability of a win is a lot lower. It doesn't mean that it won't win in your sample. However, I found that it's a lot less. So let's move on to the next candle. And you see straight away on this particular candle, we've got a bullish candle. So according to the two candle trade theory, we are anticipating the next candle to be bullish. However, it could also be bearish. So what Rock does is he scales down to the lower time frame, for example the 15-minute, the 5-minute, the 1-minute. He looks at market behavior on these, and he's looking for evidences to prove that the market is going to go higher. Now, those of you that are new and are scaling down, this can be quite overwhelming, even for a seasoned trader looking for break and retest, breakout trade, that sort of thing. So what I've done is I've overly simplified this, and what we do is we jump back on to the 1 hour chart, and all we're looking for, instead of trying to catch the exact wick and then placing your stop loss under there, all you have to do is, if you're in front of your screen, at the time when the new candle opens, if the new candle goes or takes out the high of this bullish candle that you're looking for, you can see that is a nice bullish candle, it's not like these wicks there, then you are going to be looking for a buy. So it takes out that high, you're looking for a buy. That would be market execution. The other way is, those of you guys that are working and do trading on the side, very simply you can add a what you call a buy stop, a limit order, or a buy stop limit order, where you place it above there. When the price reacts at this point, it automatically executes your trade into a buy. Where do you place your stop loss? You place it at the bottom of that wick of that candle. Now it might be that when you do this, the next candle doesn't quite tag you in, so then what you do is you wait for the next candle to take out this high, because if you have a candlestick which hasn't taken out this high, he hasn't taken out this low, it's what you call inside bar, and it's trading within this range of this 1 hour candle. So really, I don't want to be messing around inside of this. I want to be able to enter the trade when he takes out this high. And then very simply, we're just going to go for a 2-to-1 reward to risk. It may even go to 3-to-1. I have back tested this and it does go up to 3-to-1, but 2-to-1 hit rate is a lot higher. So let's see what happens. You can see in this case we did hit target. Now of course, for the benefit of the viewer watching this for the very first time, I have picked this example just to show you as an illustration. Now that you've got the concept of this, we're going to now back test it and see how it actually performs. Does it perform well, or is it just one of those where it only performs well because it's been cherry picked, if you know what I mean? So let's jump over to a date. Let's go back to last year and pick it. Let's pick the 5th of November or the 6th of November. Let's pick the 6th of November, and let's see what happened on the 6th of November. So you can see that price was in this bearish trend here, went sideways. In between, you could have taken multiple trades if you wanted to, but at the moment, the purpose of this back test, which is completely random, we are going to be looking for a buy. Now because this buy has a wick, that doesn't really entice me as much. Now some of you guys may decide to take this because you've been on a winning streak and are willing to take that risk, but let's see and wait for the next candlestick. And if you get there you go. So you can see straight away that one, if you had entered, may have been a loss, but because our entry model is a buy stop, we're not going to enter the trade until the next candle has taken out that high. Now if you had looked at this candle here and this one taking the high, you can see very simply, if I was to rewind it, it wouldn't have met our criteria for a buy because the green EMA hasn't crossed the orange EMA or the 50 moving average, so that would have been invalid. So those of you guys that are thinking that, oh well, I could have taken this one, no, you wouldn't have, because it didn't cross. So let's carry on and let's see what happens. So at this moment in time, you can see that price has in fact broken below, and at this point you're thinking, okay, well, market may be bearish, so you might have opted in to take a sell. Now what you have to understand that this is quite a large candle. The smaller the candle range, the better it is in terms of risk to reward, because if you were to try to get a 2-to-1, it would look something like this. Now because this has met our criteria, we're just going to enter, but we already know because there was a glimpse of this in a few seconds ago that this was going to tag us out, so that's no problem. Let's just put that back. Let's put that back in. That got stopped out, not a problem. Now we have got a bullish candle. All we're waiting for is this green EMA to go above, and then we got our market sentiment to the upside, which at this point it of course hasn't done. So we've gone back into bearish mode right there. The market could be moving sideways, but you know what, we're going to keep it mechanical, and we're going to be looking for a potential sell on a 2-to-1, and let's see what happens. Do we get stopped out again, or does the market allow us to have a trade? You can see that it has tagged us in, did have a wick there, but because we had our stop loss above this high, it didn't of course take us out. Let's see if we can actually win this trade, or it's going to be a stop loss. Okay, looks like it may be a stop loss. No, not yet. Okay, oh brilliant. So you can see that straight away here we have won that trade 2-to-1. So that means that loss that we had over here, we recovered it straight away. Now, because it's a 2-candle trade theory, we can try and re-enter the trade here. We've won that one, we can try and re-enter this trade here because we've won. So let's see what happens. You can see we're going to take a short, and we're only going to enter if the next candle here tags us in on this side. But this, because the candle is so large, it might mean that it may take a good few hours to hit, or it might hit straight away. Let's see what happens. Okay, so in this case, this one didn't tag us in, so we're going to cancel that order, and we're going to wait and see what the market wants to do. You can see we've got a bearish candle there, and we had a somewhat rejection, but what I don't really like about it is that we didn't really have a nice body, like something like this, but a bearish one. However, some of you guys may decide you want to enter this trade, and if you did enter this trade, it would look something like this. But myself, I would have held off from that. But let's see what happens. Do we get tagged in? Okay, we do get tagged in. Okay, so far so good. Okay, so we did win that one as well. So we got another 2R trade. So those of you that want a bit more of a risky trade, you may have decided to go off of this one based on the wick rejection, but personally I would have waited off of something like a candle body, something like that, which would give me a bit more confirmation. But that may have been, in a separate situation, worked out well, or may not have worked out well. So this case, it did work out well. Okay, we've got another 2-to-1. So far, how many R's are we up? We're up 2, another 2, that's 4, minus 1, we're up 3R. So now that this trade here has got a potential, we are just going in the direction of the trade or the trend, and we're going to try to execute again. Let's see what happens. Okay, we're in the trade. Okay, still in the trade. Okay, we've got a wick rejection here. So some of you guys that are seeing this at this point may decide, you know what, I'm going to move my stop loss at break even, just in case this one tags up. And let's see what happens. Okay, price is at the moment still all right. So we can see at this point we pretty much hit the target. Let's zoom in a bit more, just a little bit, but most likely because of the spread on the broker, that may well have taken you out for a win. So that would have been another 2-to-1, and that's all we're doing. So let's move on to another date, and let's randomize it again. Okay, so at this moment in time, you can see that price is pretty much moving sideways. There isn't a clear direction. So you can see we've got a wick rejection there, which I don't like. And let's see what happens. Okay, we still got wick rejection. And we have got price breaking above, but we need that EMA to go above higher. So what year is this? This is February 21. We need a bullish candle, which we haven't got. We have got a bearish candle there. Can price go lower down to these levels? Well, we can take that trade. So let's take this trade. I did want to show us a bullish scenario because we've done a few bearish trades, and let's see what happens. Are we going to be able to take another trade? Okay, let's do another 2-to-1 and let's see what happens. Does this one hit target or not? Okay, Okay, we're in profit. Okay, that one won as well. So you can see how simple I've managed to make Tony Rockall's two candle theory. It's as simple as that. Let's do another random bar. You can see I'm pressing the random bar here. Let's do another one. Okay, market is bullish at the moment. So here got a bullish candle there. We're on the uptrend at the moment. Can we get higher? Let's find out. Okay, stop loss below there. And we are going to go for a 2 to 1. Okay, let's see what happens. We get tagged in. Yes, we got tagged in. Now we have got a quite a big wick rejection there. So that is something to have a good think about, whether you want to move the trade to break even or not. We are trading quite high. So personally, me, I would move it to break even. Let's see what happens. We might as well get another trade. Okay, we're still good. Okay, trade may have taken us out or may have kept us in, because you can see very closely we are quite next to break even. But let's see what happens on this particular trade. Does it go up or does it take us out completely? Okay, so it's hit target. So you can see straight away that hit target, and we could have had another trade there. And currently now price is still moving to the upside. Can we get another trade towards the upside? Can it get higher or no? Let's have a look. And we are going to be doing a 2 to 1 again. Let's do another 2 to 1. Okay. Does it tag us in? Yes, tags us in, but it's quite a big wick. It's a huge wick. Okay, price is still solid and still going up. Okay, yep. Okay, so that's another win. So you can see that so long as we trade in the direction of these EMAs, we can dissect Rock's 2CT candle trade theory. We can dissect that properly and always buy in or sell in the direction of these EMAs. So we don't have to do these trend lines, or it's a breaking a trend line, or break and retest. Do you know what I mean? Where we got a break and we retested. If you're enjoying this video so far and it's been an eye-opener and you're getting some aha moments, then smash that like button. It really helps the channel. And if you're not subscribed to the channel, then give the bell notification and subscribe button a smash. And let's do one more trade and let's see what happens, because I want to be able to show you trades that we're going to be stopped up, because so far the backtest has been good. This is 2021. Let's go back a bit more. Let's do another random trade. This one is 2018. That's fine. We're going to do 2018. So what have we got here? We're on an uptrend, and we got these little small candles in the bullish side. So we're going to go in the direction of the trend, stop loss below that candle, and we're going to go for a 2 to 1. Okay, that's it. And we're doing buy stops. Always remember, it has to be a buy stop. So if we are watching our screens and we see the 1 hour take out this side, that's where we can enter market execute. But if we are away from our computer and we see this candle, then we could do a buy stop. Now if you want to know how to do a buy stop, I'm sure there's plenty of videos out there to add buy stops on your broker. But usually when I do a back test, I can add a trade on there so we can see, but it doesn't allow me to do a buy stop, so I'll have to market execute. But I don't want to market execute this, because a part of this system is that once we identify our bullish or bearish candle, we're waiting or anticipating the next trade to be bullish, not bearish. So that's what happens. Does it enter us? No, it doesn't, and we haven't lost that trade. Okay, so we're waiting for the price to be bullish. You can see we're going to ignore this noise at the moment because the market is bullish. Okay, so currently we got bearish sentiment in the market. There you go. Okay, so we have got bullish sentiment back in the market, and we are just going to be executing that trade like this. and let's see what happens. It'll tag us in. Tags us in. We're already in profit, you can see. And let's see what happens. Very simply, we're gonna be either, a lot of you might decide, you know what, we're up 1.2R. Now let me translate that to you. 1R could be equivalent to $100 profit. You're risking 100 to make 100. 2R trade may well be for you. You're risking 1,000, you're making 2,000. You're risking 100, you're making 200. So let's see what happens. Does this yep, there you go, we got another winner. Look how powerful and simple this strategy is. If you really enjoyed this video of mine and you found that this has given you nuggets that kind of put everything together from the education that Rock has provided to us in the community, then smash that like button, would really appreciate it. And if you're not subscribed, then subscribe to the channel, would be amazing. I'll catch you in the next video. Until then, have an awesome day. Speak to you soon.